Yeah, good morning everyone. Am I audible? Good morning Chennai. So, very warm welcome to all of you in this session, which is trading seekho session, which we are conducting. And this is the 8th session, as I've told you. This session we are doing in Chennai, and before that we have done it in Chandigarh, New Delhi, Kolkata, Ahmedabad. So this is the 8th city, and we plan to keep doing such sessions across India. And just to inform you that this session we are also doing online, and I also welcome our visitors who are online on YouTube for this session. And uh, again, I want to inform you that this session was supposed to be taken by 3 of us. I myself, Rahul, I take care of the equity product in ICICI Direct, and we are joined with Dharmesh and Jay Thakkar. They are from the research team. Dharmesh takes care of technical, and Jay takes care of the derivative side. So unfortunately, the flight got cancelled today morning. They were in a SpiceJet flight, and that got cancelled. So unfortunately, we'll have them joined virtually on Teams. So I will be here. So I will take care of the product side. So what we plan is initial 45 minutes. Dharmesh will help us. And before that, I just want to give a small intro of Dharmesh. He has more than 25 years of experience in the market. So you can tell that he has market in his blood. And he is with ISEC for more than 15 years now. And he is heading our technical research team. He is the head of technical research in ICICI Direct. He keeps coming on channel like CNBC, ET Swadesh, and his articles gets published in Mint and Economic Times. So not only customers, but we as an employee of ICICI Direct also follow him very closely. And so that session will be taken by Dharmesh for initial 45 minutes. Then I myself, I will run you through the best practices of investors. Like we have done a research, be us engaging as we planned. And if you have any Q&A, we will keep the Q&A for the end. And after Dharmesh's session, we will have 10 minutes break for the tea and coffee. So tea and coffee were serving outside just opposite the registration counter. And at the end of the session, we have refreshments, which I will request to please enjoy the refreshments. So Dharmesh, I hope I am audible to you.
Yeah. Am I visible now and audible?
Yeah, you're visible and you're audible.
Yeah. So thank you, Rahul, for your kind words. And first of all, I would like to apologize all of you for not attending this session. From the bottom of my heart, that because of cancellation of flights, I could not meet you personally. Very eager to meet you all, but due to some cancellations of flight, I could not reach to Madras, Chennai. Yeah, so once again, apologize for you from the bottom of my heart. And we should start the session. So before starting the session, just want to know how many are positive and negative on the market at the current conjuncture, because we have already seen a lot of downward trend in the small cap and the mid caps in last few trading sessions. So just want to check with you, are people fearful or looking to buying at lower levels?
So those who feel that market is going to correct, is the peak of the market, please raise your hand. We just want to get a sense of how many bulls and how many bears are there in the room. And how many feel that is still not the end, it will still keep going up. So I see that there are a lot of bulls and very few bears in the room. So Dharmesh, the sentiment here is more of a bullish.
Structurally positive for the market in the medium term to long term. Yes, short term volatility for the Nifty for the year 2024. With the key support is placed at 18,900. Now again, I would repeat, India, we believe, is in a structural uptrend. Not technically, but also fundamentally, because if you look at the structure right now, with the way the budget was presented in this supplementary budget, it was more capex-driven budget with clear focus on development in infrastructure, railways, roadways, all the sides. Even if you look at the government expenditure for 2025, I think there is also an increase of 11% in capital expenditure in infrastructure. That again gives us the clear-cut indication that this government is likely towards the development and focus on infrastructure. Apart from that, again, downward revision in fiscal deficit from to 5.8 and 5.4, I think so. It's something a big positive for the market going forward also. That again gives us the confidence that there will be a clear-cut fiscal discipline going forward. And last but not the least is the something on the strong sets of numbers coming from the GST, I think so. And all these things put together, clearly it look like I also something like infrastructures. Again, we believe this rally is more of a the leader for the current rally is PSU. And we believe, I think so, these corrections will offer you a great buying opportunity. So don't be get negative for PSU because it's a long decade breakout we are witnessing in PSU. So we remain to be structurally positive for PSUs, where stocks like HAL, BEL, Coal India, NTPC, Engineers India, Midhani, Container Corporations are the ones which we remain to be structurally positive going forward. Apart from that, as I mentioned, that government clearly focuses on the capex, and clearly the beneficiaries are the capital goods and power. We remain to be structurally positive for even for capital goods and power, where stocks like L&T, ABB, Kalpataru Power, Grindwell Northern, Tega Industries of the world are likely to see a positive return for the year 2024. Apart from that, oil and gas as a sector, which was been the most underperformer from 2011 to 20, a long decadal underperformance likely to reverse towards the outperformance going forward. We remain to be positive also for oil and gas as a sector, where stocks like Reliance, ONGC, Petronet, GAIL, Tata Power, Oil India, and JSW Energies are likely to see good return in the year 2024. Apart from that, there is a lot of confusion with the IT because of US high rate interest rate, higher bond yield prices. There has been IT as a sector has been the underperformer for last 1.5 years. We believe, I think so, the most of the price and time-wise correction is done for IT. Most of the negative news, I would say, are getting priced in for IT, and one should definitely look as a bottom-up approach to buying most of this large caps IT stocks from the current levels. So yes, stocks like Infosys, TCS, Wipros, HCL Tech, Coforge, Sonata Software, Latent View, we will see a good return in most of these stocks from the current market price. So buy the dips should be the strategy for in IT sector. And don't forget that IT contributes 14% of the weightage to the Nifty. So with IT and banking and with Reliance, we likely to see a target which we are talking of. Apart from that, again, I would say consumptions, pharma, real estates, infra are likely to see a support for the market. Coming to infra, we believe, I think so, as a sector, we remain to be structurally positive for infra, where the government focus is clearly visible. So stocks like Ambuja Cement, Star Cement, Birla Corp, cement has been a major proxy to the infrastructure, and we believe things will get more positive going forward for the cement companies. Apart from that, stocks like PNC Infra, Tata Steel, JSPL, Hindalco, and Graphite are likely to see a structural positive outlook going forward. Apart from that, consumption as a whole theme likely to see good buying. If you look at the hotel space, the way the consumption, the way the people are traveling, I think so tourism is likely to see a big positive. I would say the likely to contribute a big towards the growth, where stocks like Taj GVK, Indian Hotels or Lemon Trees, ECBL, Astra Microwave on the defense side. Apart from that, on the port side, logistics side, we remain to be positive for Adani Port, Gujarat Pipavav, delivery are the ones where we remain to be positive for. Textile, again, I would say most of those things are getting negative, getting priced in textiles. And we remain, I think so, this is a good time to look at the textile stocks also, where stocks like KPR Mills, Indocount, Ambika Cotton are the ones where Vardhaman Textiles are the ones where we remain to be positive for. Railway stocks. Now, yes, we have seen a good run up in the railway stocks in last few months. And what we are seeing is a retracement of a rally happening in the railway. We are not negative for railway. Yes, the corrections were very steep and fast. But as I said that the movement was also so fast. So it is something that when you run too fast, you require some bit of a breather. And what is happening right now in most of these PSU stocks are nothing but a breather I would say, a retracement of a rally. So remain to be structurally positive for stocks like Recon, Tex, Macro Rail are the ones one should definitely look from the medium term perspective. So this is how the market seems to be panning out for the year 2024. Now coming to the election years, I think so. To my next, now coming to the target of 50,000. Why we feel the market should move towards the 50,000 by 2030? Yes, if you look at the history of the Indian stock market since 1980, each decade, if you look, the average return, median return for the market has been around 4x. Now, if you look from 1981 to 90, 91 to 2000, 2001 to 2010, 2011 to 20, average return for each decade have been 4x. If I look from 2020, with a closing of around 13,982, the target comes to around 55,000. But being a round figure, we have taken up 50,000 for the Nifty. So we believe if one has done nothing and holding on the patience with the stocks, it has always been a good saying. The market is all about compounding, how you look it out. So yes, one if having a holding capacity will definitely be the one who will create the wealth. So yes, to create the wealth, you require a good quality stocks and you need to hold them for a longer period of time. Yes, inside that longer period of time, there will be a zigzag movement. There will be it will not be a linear, it will be a non-linear. But you need to be very patient and need to be very calm while holding your positions. Because if you have invested in the good quality of businesses, I doubt one should go on the sell side. So yes, a decadal study, longer term picture gives out that is there's a long way for market to go, but this long way will come with some bit of a corrections during the phases. But one more thing I would like to highlight in this is something the decadal years. If you look at these years, third year, fourth year, and ninth year, I again repeat, each decade, every third year, fourth year, and ninth year has always given market has given the positive return. Look at this. Third year, it was 9%. On an average, it is around 7%, 18% median return. Fourth year, it was 15%. And the ninth year, it was around 40%. So the average comes to around 15% for the median return for the year. So for the fourth year, again, is something I am very confident and you have never seen this deep analysis where each decade, each years are also getting research and where we came out with a longer picture where we believe as we are into the fourth year of decade, this year we will see the volatility, but this volatility will be a buying opportunity. So don't get worried towards the medium term perspective. Look, this correction which currently we are already witnessing, don't take this as a negative, but look this as a buying opportunity. We are very confident that the year 2024 should be ending with a green and with a positive return of 15% on the Nifty with a target of 24,700. But to talk for a bigger picture, by 2030, we expect market to move towards the 4x return by 2030. So this is the bigger picture for the why we believe market should head towards the 50,000. Any questions? I would like you to very happy to take if you have any queries, Rahul.
Yeah, so am I audible? So Dharmesh, I will take the questions on behalf of customers, on behalf of clients. So the first question is?
Yeah, I'd like to know what is the outlook on the Adani stocks actually, because Adani Ports has only got a mention. What about Adani Enterprises and the other Adani?
So as far as Adani Group is concerned, we remain to be positive for the stocks like Adani Port, Adani Ambuja Cement, are the ones one can definitely look out from the medium term perspective. So yes, the stocks, there will be a lot of volatility. Again, I would...
We can stay on this slide and you can just have a note of these stocks. I'm sure it's visible from PSU what Dharmesh said that the theme of this run will be PSU. So Dharmesh, yeah. So Dharmesh, if you can also give a small background. Yeah, so by the time Dharmesh joins us, the theme, the selection of these stocks is purely technical. So Dharmesh is heading our technical team. So he had seen the charts. He is being studying all the stocks, all the sectors, and since I mentioned that he has experience of more than 25 years, so he would have seen the charts on a medium term to long term perspective, and there are various themes which comes into.
The second thing is they wanted us to sell all the PSU stocks. So these are the two things Anish and Nilesh they were talking about. So here the perspective is different. So why is that? Of course, there will be a difference in your opinion. So
Yeah, sir. See, every research guy will have their opinion, and the study which we are representing is purely based on the research team which is in place in ICICI Securities. So the theme is clear that PSU is the theme. So Dharmesh, is it audible?
can I ask you?
Yeah. So in the meanwhile, like by the time Dharmesh joins us, and you can keep your questions handy with you, I will. It is purely on technical. Not fundamental. No, sir. So this this PDF is the research report which we have published. It is in public forum, so you can get it downloaded from the website itself. So it is available. Yes, sir.
Where is this available? It is available in ICICI Direct trading site.
Sir, what we will do is we'll share the PDF here itself. So like anyone who is interested can take performs, and the analysis was done very minutely, looking into what happens in third, fourth, and seventh year. So every fourth year, it is evident that market remains volatile. So technically, is purely the collection of emotions. Volatile, if it corrects, I see recommended by ICICI Direct, and PSU is the theme. Yeah. Yes, sir. Sir, I will request that you keep the queries with you. The best practices of investors while investing in the market. Investment you would have seen goes in the gold, FD, but now that trend is changing. You can see very needless to say that how much return you guys would have made. Like we have seen stocks going up 6x, 10x, and a stock like Tata Motors at one point of time it was at 100 rupees in equity market. However, in our country, that percentage is very less. Like it is not even 10%. So we still have none of them you can see are mid cap or small cap. So these are large cap stocks. So in this session, I will also tell you like what happens when you invest in a stock which is large cap, mid cap, or small cap. We'll run through that. And moving to.
Can you go to the previous slide?
Yeah, I'll just run through this once.
Can you go to the previous slide?
Yeah. So I myself, when MRF was 7,500, I used to see that the stock is trading near, is going to touch the 5-digit number. So as Dharmesh also said that this year is going to be an eventful year. Lot of volatility in the market is expected, but we should take all those things as an opportunity to invest in market. We should not be fearful in market correction. We should take that as an opportunity, because on a long-term perspective, by the end of 2030, the target which we have is 50,000. By the end of this year, the target which we have is 24,700. So our team is bullish. And these are few photos which we have captured, like how exactly the stock market, we have seen that it keeps going up. So what drives it? It is all our behavior, how the society changes, how the preference changes, how the product changes over a period of time. So it is on us. How do we identify the stocks? We stick on to those stocks, and those stocks help us make the money. So these are few photos like 15 years back. Now, I'm sure that a lot of us can completely correlate with these photos, like how banking has transformed from a branch banking to a complete digital banking. Even I myself don't remember when last time I visited the bank branch. So these are the telecom transformation which we have seen. So these are the changes which we have seen in our generation. It is not a very old change. It is just last 15 years ka change which you have seen. So similarly, although we cannot foresee what's going to happen in next 15 years or 20 years, but definitely a big change is expected, and those change will bring a good amount of value creation in the market. So I think we can switch back to the Dharmesh's session. We'll complete that, and then I will again come back to the best practices which investors have shown in the market. Yeah, Dharmesh, can you hear me?
Hi Rahul, Jay here.
Yeah, Jay. So we have few questions, and the first question is, what is the basis of the stock selection which was made by Dharmesh? So see the market by the end of June, July. So these are two questions if you can answer, and then we can continue with the session.
Yeah, so first of all, sorry all of you for this disruption. Yes, for as far as are concerned, yes, we believe, I think so the market currently into the active phase. But at the same time, we don't expect market to. So yes, it will be a zigzag movement, but zigzag should be looked as a buying opportunity.
And the second thing, Dharmesh, was what is the basis of the stock selection which we have shown? If you can give some rationale about the selection, and then we can continue with the deck.
Asha, about my top picks. About topics. Yeah, so for general stock selection, we are talking about my top picks.
So one slide you have shown that PSU में these 4 stocks you have to invest. So that in that slide there are a lot of stocks. So what is the rationale for the picking the stock? Is it purely technical?
Yeah. So yes, good question. So yes, it's more for technical, but at the same time, I would like to repeat in ICICI Direct, we also look at the fundamentals also. We generally avoid most of these tinted stocks or CG issued stocks and not be the part of our ICICI Direct recommendations. So it's our in-house filters on technicals based on our in-house technical filters. We come up with the stocks and also we do a fundamental check for the same. So it's a more of a, I would say, a techno funda type stock selection.
Yeah, thank you, Dharmesh. So I think you can switch back to the slide which you like where we paused, and there are a lot of insights which are yet to be shared by you. So we are eager to hear from you, Dharmesh.
Yeah, sure. I would be very eager to. Then again, I will apologize
Yeah.
to all for not being visiting it personally. Yeah.
So I think we can move
Is it
back.
shared, Rahul? Is it?
The PPT is not visible here now.
Yeah, just a second.
So you can share it, Dharmesh.
Yeah. Is it now?
Yeah, Dharmesh, it is visible now. You can continue.
So just to where we stopped, we paused was something like, yes, the decade again for the India country. It's, I would say, the decade of India, and we should be the one on the much higher side in terms of relative outperformance compared to the global markets as well as emerging markets. So yes, I again repeat 50,000 by 2030, and the fourth year, third year, and the ninth year of the decade has always been given a positive return. So as we are entering into the fourth year of the decade, we remain to be positive for the market with a target of 24,700. Now coming to the election, this is something the interesting slide. I think we should like this slide. If you looked at the election years, how the market generally behaves during the election years. So we have done the analysis for last 30 decades in 1918. There have been 11 elections. Out of these 11 elections, 9 times market has always given the positive return during the election year, except to in 1996 and 1998, where you have a coalition government and which was not there for a long period of time. Except 2 years, all the years, market has given a positive return. So again, I repeat, as we are into the election year, volatility will be there. But looking at the historical data, the median return during the election year has been 17%. So that again argues again to a target of 24,700 to 800 for the Nifty by 2024. So election years has always proven to be a best years for the market historically. Moving to my next slide of history of the mega bull trend. Why we believe I think so 50,000 for the Nifty. If you look at the history of the global markets like Dow Jones, DAX, Nikkei, Sensex, we have compared this index with the MSCI World Index. So it's a more of a ratio chart, I would say. Ratio charts are nothing but the comparison of two assets where where which gives you something output where which particular asset is likely to see the relative outperformance. So looking at this Dow Jones versus MSCI, if you look at this chart, whenever there is a breakout happening in the Dow Jones MSCI index in 1990, post that Dow Jones index have given 5x return. Same is happening with the DAX in 1993. We have seen a return of X. Nikkei has been one of the fantastic years of 1969 to 1980. A breakout post has given a 5x returns. Again, coming to our India Sensex, we have witnessed this breakout in 1991, where market has given 7x return. Again, going back to 2000 to 2003, we have given a 7x return. Again, in 2023, the same ratio chart has witnessed a breakout. So again, looking at the historical data, minimum 4x return is likely a target for the decade 2030. So this again gives us the confidence that yes, there will be a not the all the time a good market. There will be times of corrections, phases, but these corrections will not last for a longer period of time. Again, I repeat, bull market corrections are short-lived and they are very steep and fast. So again, in current context, if you look at the small cap index, have seen a correction of around 16%, 17% from the top in just 1 month. But we believe downside seems to be limited and we should see a gradual upmove for the same. So again, coming to this history of mega bull trend, we believe this is a decade of India and we should be minimum looking at a target of 50,000 by 2030, just based on the Sensex versus ratio chart of MSCI World Index. Now coming to our target of year 2024, purely basis on technicals. Previously, what we have seen was historical trends, how the market views history. Now coming to the purely from the technical perspective, if you look at my chart from 1999 to 2003, 7 to 8 quarters of consolidation, and that we have witnessed a breakout with minimum return of 97%. Same from 2008 to 2012, market has done nothing. Post breakout, we have witnessed a sharp 44%. Again, in 2015 to 2017-18, the market has done nothing for consolidation. Post that, we have seen a breakout with a minimum return of 31%. Same with the case of 1920-21. Again, I would say from 21 to 22, market has done nothing. It was consolidating in 2021. Also, we were at 21,200. Currently, we are just 22,000. Not so big target found in Nifty. We are likely seeing a more of a consolidation for last 7 quarters. We believe minimum target for the Nifty based on the historical data we have kept of 47% from the bottom, which comes to around 24,700 for Nifty. So 6 quarters of breakout should not get tapered down or the rally should not get delayed in just 1 or 2 quarters, but should get sustained for next 6 quarters. So we believe, I think so, the market should see a target of 24,700 purely from the quarterly breakout. But inside this breakout, I would again repeat, there will be a time of corrections. Such corrections, we should not get fear. We should not get worried for those corrections, but should be looked as a buying opportunity. Now coming to our target of the short term for the Nifty, why we feel that the market should move towards 23,400. If you look at the history of my table, which Excel, which I have already drawn in this chart, from 1991 to 2019, there have been 7 to 8 elections. In this election year, some interesting data to highlight that the corrections with what we have witnessed is generally in the month of Feb and March, the first quarter. And the average corrections ahead of the elections have been around something around 4 to 5% on an average. So we believe, I think, so in the current context, we are already done with 7 to 8% of corrections. Such corrections, again, we believe should be looked as a good buying opportunity. And it is something, a historical data which says that during election year, Feb and March has always been a volatile year, volatile month. And such volatility, whoever has played or whoever have bought in this volatility has always rewarded with a minimum return of 14% in next 3 months from the bottom. So again, this chart gives you a confidence that the current corrective phase in the month of March, we are not so much negative or we are not getting too much worried for this correction, but we look this as a buying opportunity. So again, I would say the minimum return of 14% from the bottom likely to hit the target of 23,400. So now I just want to share any query on these two slides. I will be happy to take. Any queries, Rahul?
So Dharmesh, I think we can take the queries at the end. So you can just
Okay, fine.
like run with your flow.
Yeah, sure. Now coming to Bank Nifty, when I say the Bank Nifty contributes 25% of the weightage to the Nifty, we remain to be structurally positive for the Bank Nifty. Recently, if you look, Bank Nifty made a new high of 48,600. What we see in the current correction is a corrective phase or a retracement of a rally happened from 44,000 to around 48,400. We don't expect Bank Nifty to reach the level of 46,000. However, we see this correction should be looked as a buying opportunity in most of these private banks as well as PSU banks. So yes, things looks more positive for Bank Nifty from the current level, and we have a target of 54,000 for the Bank Nifty, which is the upper band of the channel of a target of 54,000 for the Nifty year 2024. Again, this is something a slide which says that large caps should see a relative outperformance compared to mid caps. What we have done in this chart is we have done a ratio analysis versus Nifty versus Nifty 500. Now, what does this indicate? This indicates whenever the ratio chart of Nifty versus Nifty 500 has approached towards the level of 1, which happened in 2005, 2018, and 2024. If you go back to the history of 2018, whenever the ratio chart hits the bottom of 1, during those particular years, large caps have relatively outperformed the mid caps. So we believe, looking at the current context, we will see a more of a consolidation for the mid caps for the next 2 to 3 months, where we will see a more of a stock specific action likely to continue. At the same time, we expect the large caps to relatively outperform. So focus should be towards the large caps from the current levels. As I already mentioned, the sectors like banking, PSUs, IT, capital goods, auto, and metals infra are the ones where one should definitely look focus towards the large caps. So our view from the current levels is that we will see a relative outperformance of large caps from the current levels. At the same time, we are not negative in mid caps. We believe mid caps can go into consolidation with stock specific action. At the same time, post May, post June, we will see a gradual recovery in the mid cap index. So maybe coming 2 months should be a more of a shopping time in good quality stocks, most of this mid cap stocks. So the current slide says that the large caps should see relative outperformance in the coming months. Now coming to mid caps, this I believe this chart and this table will bring confidence in you to look for mid cap stocks. And if you look at the history inside the structural bull market, if I draw the table where during the structural bull market there are times of corrections in the mid caps. And if you look at the average correction in the mid caps index is around 12% since 2006 to March 2024. In the current context, we are already done 9% correction from the top. maybe 3-4%, 5% correction. Again, I repeat, cannot be ruled out. It can happen, but that should not be looked as a negative because historical data says that whenever Nifty mid-cap index have corrected during the structural bull market, that correction has doesn't last for a longer period of time. But however, post that correction, we have always witnessed a new high for the mid-cap index. So we believe, I think so, in the correct context, this could be a good opportunity, I would say a last opportunity of 2024 in the mid-cap stocks. Maybe 4-5% corrections, again I repeat, cannot be ruled out. But this correction should be looked as a buying opportunity because I believe there is lot of negativity in the mid-caps because of sharp corrections. But if you believe in history and always in technical, we say history repeats itself maybe in other form. We believe there will be a time where we will see a gradual recovery in mid-caps post the month of May. So yes, current call should be looked as a buying opportunity rather than talking too much, getting negative on mid-caps. Now coming to market breadth. Now this is something again a deep analysis on the research side, on our technical side, since 2018 to 2024. This is something advanced decline ratio. It says something that out of CNX 500 stocks, whenever a stock number of stocks moves above 460 on the declining side, a particular day, and the percentage of the stocks above 50-day moving average approaches towards only 20% of the stocks are trading above 50-day moving average. Most of the time, there has been a bottom formation happening in the Nifty. There have been 11 instances. If you see the circle which I have drawn, where it says that whenever the percentage of stock, whenever only 20% of the stocks are trading above 50-day moving average, and net of advanced decline ratio approaches above 460, where it means to say that 4 out of 500 stocks, 460 stocks were traded negative on that particular day. Has most of the times market has formed a base formation and post that we have seen gradual recovery in the market. In the coming week, last week, we have already been in the coming current week, the Thursday trading sessions, the advanced decline ratio was around 460 from 462. It's net of advance and 462 stocks were those on the negative side. With if percentage of 20% stocks like just about 50-day moving average. This is something indicating us that maybe there is a fabulous return of 20x, 13x, something like that. In the current context, those sectors from 11 to 20 have been the most underperformers. In coming to 2021-24, again back in action like capital goods, auto, metals, oil and gas, and PSUs, we are back in action with number of X return, 3x, 4x return. I believe there's a long way to go for this sector, but intermediate corrections, again I repeat, we cannot be ruled out. But the current rally is a more of a replica of 2001 to 2010. So the sectoral leadership is likely to be coming from capital goods, auto, metals, oil and gas, and PSU. Now coming to sectors which are likely to see the performance. Power as a sector, we have seen a long decade breakout for last 14 years. We believe this long decade breakout should not get the rally should not get delayed in 1 or 2 quarters. It should continue over the couple of years. So we believe we remain to be structurally positive of power space, where our top picks remains to be Tata Power, NTPC, JSW Energy, Kalpataru Power, and Power Grid are likely to see outperformance. PSU banks, the most underowned for most of us, and people were not in that believer, good PSU banks will see outperformance. But if you look at the technicals, again, 10 years of breakout with strong volumes and with good fundamental cleanup in NPA, likely to see a clearly outperformance from PSUs in the days to come. So as I said, SBI will be the stock of the year for 2024. Apart from SBI, Bank of Baroda, Union Bank, Bank of India, PNB, and Indian Bank are likely to see outperformance. IT, lot of confusion on the back of US tailwind. where we believe, I think so, most of the negative news are getting priced in for IT. If you look at the historical data section, there is something IT is something a peculiar pattern of corrective phase. Where the sector correct for the 7 quarters, the magnitude of correction has been around 30 to 34%. And post that, most of the time, all the times, not most of the time, IT index have given the new high, I would say a positive rate. In the current context, we have already done with 7 quarters of correction. Exact the magnitude of correction is 34%. We believe most of the negatives are priced in for IT. Any dip in IT in the large cap stock should look as a buying opportunity. So we remain to be constructive positive for IT from the current level. One can take a contra bet that stocks like TCS, Infosys, HCL Tech, Wipro, Coforge, and Latent. So yes, this data I hope will give you confidence that historical trend says that IT index as a whole has not seen a correction for more than 7 quarters. And corrections have been around 30 to 35%. So price-wise and time-wise correction is done for IT. We should be looking for target of 43,200 on the IT side. Again, PSU, as I said, the PSUs are the latest of this, and we can see a much which others for metal index as a whole. Because if you look at the historical trend, metal index has always had
That gladiator stocks and a few other research which he has shown is very, very popular in ICICI to just keep.
Before the budget was announced, everybody being an election year, everybody expected a lot of subsidy in the fertilizer segment in the sector, but which was not given because I think BJP government was very positive about their winning chances. So I think, but what the market didn't factor was the price, the import cost of urea was cut down, and that is why the subsidy was not given on the budget as a subsidy itself. And the markets have overreacted for that factor. They took it as an opportunity. Operators have taken it as an opportunity to bring down the markets in the fertilizer sector as such.
So in the benefit of time, I'll just request Dharmesh if he can just give his insights on fertilizer stocks. So we heard you, sir.
Yeah.
So
Just one last point.
yes, sir.
So the PSU fertilizer sector, if you see GSFC, NFL, RCF, all these stocks are such good picks, but off late, like it's all been coming down. So was this the plan, because why has the fertilizer sector done so well despite the valuations being so low? We are seeing a big steep fall in fertilizer stocks. What is the reason, sir?
Yeah. So good morning, sir, and a good question. Why I have not put fertilizer in see, first of all, we don't have fertilizer index. So that is one reason why I have not published the fertilizer here. Second was, sir, yes, we need to be structurally positive for fertilizer stocks. Now coming to your question, why the stocks have corrected. If you look at the rally of which has happened, CEF or NFL or JFC or GSFC, they have been very steep and fast. If you look, RCF moved from 70 to 140 in a span of 2 months, 3 months. Same is with the NFL from 50 rupees to 140 rupees in a span of 3 months. What has happened? All these stocks have witnessed a decade-long breakout. And we believe this breakout should not get tapered down in 1 or 2 months of a rally. What is happening right now is a retracement of a sharp rally which happens from bottom. We don't expect much negative for fertilizer stocks, a positive for FMCG as a sector as a whole. But as the demand from the rural consumption is one which is in line with the expectation for the FMCG space. So we believe I think so more for stock specific likely to continue for FMCG. But at the same time, if you look at the risk reward ratio for the stocks like Dabur or HUL, we believe I think so
The return. So we should not be fearful with the short-term corrections. We should take short-term correction as an opportunity. If you are convicted, like if you have conviction that the stock is going to do well, so good quality stocks have always give the return, which will be evident in the next slide. So this is the overall investment and the time horizon chart. We have seen that those who stayed invested for more than 30 months have made better returns. So you can see that at 30, the returns are going up. So if we split it between a frontline stocks and mid-cap, small-cap type of stocks, so the blue line is the top 100 stocks, and the orange one is Nifty 500 stocks. So we have seen that the returns are always better in a frontline stock. Although we all can see that the mid-cap, small-cap give a better return, at the same time it is very, very important that which stock you choose from that bucket. So mid-cap, small-cap is a huge bucket of stocks. So out of that bucket, which stocks you pick is very important, and it becomes very, very challenging for a retail investor to pick right stock because it involves a lot of analysis, study, conviction, annual meeting of the companies to get the sense of how exactly company is going to do. So that is the kind of involvement people do while they invest in small stocks. So we have seen that the returns has always been better when you invest in a frontline stock which is Nifty 100 stocks. So going forward, one more approach which we have seen that when we invest in the market, generally people tend to do concentration of stocks. Like stocks like Yes Bank when it fell, ITC it fell, stock like Tata Motors when it fell, they rushed in to average. So there is a tendency that people average the stocks which they have in the portfolio. So we should have a proper averaging strategy. Like people, they just rush in without a bigger fall, they put all the money, and when you see a better opportunity to invest, we don't have money left. So we should not be rushing in when we invest. And here in this slide, like we are talking about a diversification. The customers who have held on to more than 10 stocks, 10 to 12 stocks, the return was better over there in the portfolio. Because when we rush in, when we do a concentration, we don't tend to have a fully diversified portfolio. So diversification is equally important. We should not be having a limited 3, 5, 7 stocks. We should have at least stocks between 10 to 15 equally distributed, because at times when the demo,
That you have shown to people.
sure sir. So I'll go to the demo portion now. So I was supposed to give the demo.
Same thing will come again, is it?
No sir, the PPT portion is done, so we'll just go to the demo. We'll show you live demo.
Yeah, we missed all the PPT.
Yeah, so ultimately we will have one single app which is ICICI Direct all-in-one app. I will request all the participants here, all the visitors here, you can please go to the Play Store and search for ICICI Direct all-in-one app. So that is the app where you can invest in all the product. You will get to invest in mutual fund, stocks, and bonds, FDs, everything is there available in one single app. So that is going to be the app which we have, and we have recently closed our old app. So sir, we'll take the queries at the end of the session, and we have ample of time, and we'll try to end this session in next 1 hour, where I will take 40 minutes, and then Jay is and on the mobile app, you have to just do the fingerprint, and using Face ID also you can log in the mobile app. And here we have the option scan for web login. So I'm just scanning the QR code here, and my account got logged in. So it is a completely type-free experience. No need to enter the user ID, no need to get the OTP, enter the OTP password. So complete type-free login experience is what we are providing. And straight away we'll go to the watch list. So I just wanted to show you this screen. So this screen is a single screen trading experience which we are providing, where you can track the stock. It is a real-time screen where the price keeps updating on a real-time basis. You can check your orders. There is a separate check the orders. You can check your positions, portfolio. So everything is visible in one single screen. You can keep an eye on the stocks. You can keep an eye on the portfolio. No need to switch. So traditionally, the concern which customers have raised earlier was when they are on the website, they have to keep not only Indian brokers but foreign brokers also make use of this platform. So we are providing this trading view chart where the moment you add any stock here, and if you just do a mouse over on any of the stock on the left side, you will get an option to open the chart. So let's say I want to see the chart of RBL Bank. So RBL Bank, the fourth option is the charting option. You click on it, and the chart will open on the right, on this side. So on this charting option, if you want to maximize this screen view, there is a maximize option at the top. At the right side, the third icon beyond the setting, beside setting, you just click on it, and this chart will open in a full screen. You also have a choice to change the period of the chart. You can change the type of the chart, and you can do it very conveniently by clicking here. So you can see one D written here. So D means it is a day chart. So if you want to change the time frame, you can just click on it, and you can, for intraday customers who wants to do intraday, they can change the time frame to 10 minutes, 15 minutes based on your preference. And those who are looking for a long-term charting, historical charts, you can change it to weekly charts also. So it's a day chart. If I do it weekly, then each candle will represent 1 week. So it will show you what was the weekly open, high, low, close, and you can plot your own studies. So by clicking on FX here, you have all the studies, more than 100 indicators are there. You can plot in my way, like most of the people, they use Bollinger's band and RSI. So you can just simply plot it. It's already plotted on the screen. So based on your preference, your convenience, you can plot it. It will automatically get saved. So next chart which you open, so these indicators will already be plotted for you. So you don't have to replot it again. So that was one thing. And in case you have preference of looking into multiple charts at a time, so you can change the screen layout. So single screen layout, you can see 4 charts at a time with these layouts. You can see 5 charts at a time with different layouts. So you can conveniently change the layout. So if I want to see, let's say 3 charts, 1 vertically and 2 horizontally, if I plot this one, so the whole layout will get changed, and you can then move to the full screen, which will help you to have a complete charting experience on a full screen. So that was one thing, and I will urge, if you prefer charting, you make use of this platform. I'm sure you will feel that difference, that richer experience. Now moving to order placement, you can do order placement from this screen itself. So all you need to do is click on B or S, that is buy or sell. In this one single watch list, you can add equities, you can add derivatives, you can also add currency and commodities. So all the asset classes can be added in one single watch list, which you can track, and you can directly place an order from there. So order placement is fairly simple. There are options available: delivery, intraday, MTF. I will talk about MTF in the latter part of the session. So based on your choice, your preference, you can select the product and straight away place an order. So for the convenience of all, let us place one single order to buy RBL Bank at limit price of 220. So there is a pay later option available also. So the moment you click on pay later toggle, if you just switch it on, you can see the price here 220 will change. It will become 99. So pay later is an option where you can invest in stocks just by providing a small amount. You don't have to pay the full amount. You have to pay 30%, 40% margin, and by doing that, you can purchase the whole quantity. So I will talk about that later on. So the moment you click on buy, the order will be placed and you can track it on the same screen itself.
Nothing to do with the MTF?
Sorry, sir?
Pay letters, nothing to do with MTF.
Pay later is MTF.
That's what
Yeah, pay later is MTF only. So we have just renamed it for the sake of simplicity. People don't understand MTF. So pay later is the lingo which people are using nowadays. So similarly, if you want to sell a stock, so selling is also possible. You can go to the portfolio. From portfolio, you can sell your stock, and you can alternatively do a sell here and do a sell transaction here. So one thing I wanted to show here in the sales screen is that at the bottom there is the option of eATM. If you scroll down, here you will see eATM. So this eATM option is available in all the platform. It is available. It is there on mobile app. It is there on website as well as this watch list. So the beauty of this product is whenever you sell any share, you get the money within 5 minutes. So there is no extra charge for this facility. The brokerage what you pay is the brokerage is levied. The good part is you get money within 5 minutes. And you will get 75% of the money because 25% is the margin amount which you will get on the next day on the settlement cycle. But 75% of funds you will get instantly in your bank account directly.
But I think not all the stocks, only selected stocks.
Yeah, so we have approximately 1,000 stocks that covers 99% of the exchange volume. So remaining beyond 1,000 stocks we don't allow because there could be a settlement failure, there could be a like delivery issues. In trade to trade segment, it is required that you need to have stocks, delivery has to be there. So in top 1000 stocks, this facility is available, and the moment you switch it on, if it is not available, it will give you error message that this facility is not available for the stock. So that is very handful, not even 1% of the exchange volume. So moving ahead, one more part which I wanted to say here is EAT. Yeah, so T+1 is the normal settlement cycle. So very nice point, sir, here. So whenever you sell, let's say Friday, yesterday was Friday, if I sell a stock on Friday, as per exchange, I will get the funds on T+1 day, which is on Monday. So if there is any holiday, like Good Friday is a trading holiday, so if you sell on Thursday, you will get funds on Monday. So it may take, if there is a weekend or holiday in between, it may take 2 to 4 days for your money to come in your account. And you could be in a state of emergency. Okay. So using eATM facility, which is available and by default activated for all the clients, all of you, even any of you can try it if you are selling stocks, just switch it on. So the beauty is the money will come within 5 minutes in your account, 75% of that will come, remaining 25% we will adjust the charges, and the remaining funds will come on T+1 day. So that is one thing. Sir, if you sell stocks in eATM, then same stock you cannot buy on same day, but you can buy any other stock. By using that fund, you can do whatever you want. You can even withdraw the funds from bank, but you cannot buy the same stock. 75% funds you will get, you can use that fund based on your preference, based on your requirements. So the way you want to use it, you can use it. No, it is only for stocks. So eATM facility is available only while you sell stocks from your demat account, and as sir you mentioned, it is not available for all the stocks. It is available for top 1000 stocks, which you can use, and 75% funds you can make use of it. The customers who have opted to Prime plan, so we have lower brokerage options, Prime 4999, Prime 9999. So those plans, the limit of eATM is up to 1 crore. So you can get funds up to 1 crore. So that means you will be allowed to do a sell transaction of 1.33 crores, and 75% of that, which is 1 crore, you will get directly in your bank account within 5 minutes. And we don't charge extra for that.
Suppose we want to sell the stock and can purchase the commodity on the same day itself.
Sir, you will not be able to do that if you do a normal sell, because you will not get the limit when you do the normal sell. So if you do a eATM, you will get the funds. You can make use of funds the way you want, sir. It is up to you how you would want to make use of funds. Yeah, I will show that, sir. It is on app also. If you do a sell, it is buy page. You have done a buy page. If you go to the sell page, you will see eATM option. So eATM is only for selling because you want funds. So moving ahead, sir, I want to show you. Yeah, it is there. GTT, I will take you through GTT also. GTT also is in my list. I will cover that. So GTT currently is available only on the website. It is not available on the mobile app. So it is in development, and you can very soon, maybe in next 20 days, by the end of this month, you will have GTT in the mobile app also. Yeah, this is the web version, sir. So going ahead, there is, yes, sir.
What is the tax treatment on this when we sell? Is there any tax deducted, or we have to do it ourselves later?
Sir, long-term capital gain and short-term capital gain, if you're talking about those taxes, so you will have to do it yourself. Only for NRI client, we block amount as TDS, which we pay, and you have to do that calculation at the end of the year and file the return. For resident Indian customers, the capital gain has to be calculated all by yourself. There is no deduction at the time of doing transaction.
NRI cannot do it.
Summary in the report.
Tax harvesting thing is not functional actually, even though the link was sent to
Yeah.
but the thing is, the thing is even after selling the stock, right, it still shows the same amount.
So I will have it displayed here, so that is also part of it. So I will quickly try to cover other things, and sir, I will request all of you to please have your queries noted in the notepad so that we can take those queries at the end. I'm sure that like lot of you will have queries, so we have volunteers from ICICI Direct locally available here who will help all of you to take your queries separately after the end of the session. So one more thing which I wanted to show you was one-click equity. So if you go to Smart Tools at the top, so under Smart Tools, you will have a option one-click equity. So as I said, while you invest in equity, it is very important that we should all make use of diversification. We should not be investing in one single stock. So this particular product helps you with that. And for those who are beginners, for them, we have research portfolio which is already curated by the help of Dharmesh and Jay's team. So they make portfolios, and recently the portfolios which we have launched. So these are the 3 portfolios which we have launched, and there are 60 plus portfolios available. If you want to explore any of them, at the top we have an option explore one click. So here explore option is there. If you click on explore, it will show you all the portfolios which are available. So all one click is again an option where you can click on all one click option at the top. So it will show you all the one clicks which are available on the portal. So these are all research recommended portfolios, handpicked. All the stocks are very carefully handpicked by our research team. So let's say you are looking for a IT stock. So if you want to invest in IT, so at the top you can just search. At the top there is an option to search. You can just search IT. Or let's say you want to, you're looking for green energy. So you can just search green. So it will show you all the portfolios which are having the theme of green energy, or which are having the theme of, let's say, tourism or metals. You will have a search of it. It will show you all the portfolios, and you can also do the sorting of the portfolios. If you want to filter it down, we have themes available at the bottom, and by using these themes, let's say I want to look for power sector. So you can just click on power and FMCG. So all the portfolios which are into power stocks and FMCG stocks will automatically come here. So this is free for all. So there is no extra cost which is for this product. You can make use of it. I will urge all the user to make use of it. And by this, you can do a stock SIP, you can do a SIP and lump sum investment. So let's say I want to invest in House of Tata. So these are few Tata companies selected by our research team, and you can invest here. You have a choice the moment you click on invest. So like first of all, it will show you which all stocks you are investing in, what is the weightage. So it is always equal weighted, and the moment you want to do an investment. So if you want to look for a research report, that is also available here. At the top, if you see here, we have a portfolio report available. So if you want to study what was the rationale for these stock selection, you can run through it. So all the information is available. You can read it carefully, and then you can choose to invest. And the moment you click on invest now, it will give you option to invest using lump sum, one time, and pay later. So pay later option is also available. The amount of 38,418, it will change to 16,000 rupees. So here 16,000 is what you have to pay upfront, and remaining funds you can pay within next 360 days. So this is what margin funding is. I will talk about margin funding in details. And one more thing about one-click equity is you can create your own portfolio. So those, let's say you have 10 stocks in mind. So you can create a basket of those 10 stocks here. So create option is there. So let's say Renu, you can just make use of your own stocks if you have in mind. Just try to make a portfolio, and so you can create a portfolio here. You can save the portfolio, and the best part is you can also check the return of the portfolio. Even though you are not investing, let's say I am creating a portfolio today for 10 stocks, and the moment you save it, and after a month if you again look into that, it will show you from the date of creation of portfolio till the day when you are checking it, what was the return that portfolio has given. So it will also show you the track of the return, plus it will also give you a choice to invest at any point of time in those, and if you have already invested, you can track the return of your invested portfolio. So it's a very, very engaging tool. So especially those who invest in bunch, who would like to invest in a disciplined manner in certain stocks every month, every quarterly, they can make use of this facility, and it's a very beautiful product I've got about this. And the best part is the tracking makes it easy, and it also takes care of your emotions and diversification. So it's a very disciplined approach of investment.
What is the interest you are charging to the MTF pay data?
Yeah, so the MTF, the interest, the best rate which we are offering is 9.69%. So 9.69% per annum, it makes 0.06% per day. It is 9.69. Yeah, it is 60 rupees per lakh. 26 rupees per lakh, so it is 0.026%, right?
Do you have a small case in addition to this, or is it a proxy of small case?
So in case,
Does it do the automatic realignment as in case of small case? Can you click a button that will tell you come out of this stock and you can additionally invest in this stock? So it gives you a
yeah.
automatic.
So as of now, we had provided the rebalance option. So what we prefer is, because these portfolios are short-term portfolios, we don't recommend to stay investors. Like some of the portfolios, small case is also there. Smart tools, if you click on like smart tools, last option you can see small case is there. So if you have preference for small case, click on it. It will directly log into you on the small case. Whatever transaction you do here will automatically get reflected in your demat. So you don't need a separate login for small case. Just click on it. It has opened.
But you don't have rebalance option in your portfolio, right?
Rebalance we don't have, because we prefer closing the portfolio. Like when there is any recommendation to exit, we give a exit, and then you get a notification also. Let's say you have invested in power portfolio, and after 7 months our research has given an exit because they feel that now the theme, the return which is expected is done, we should churn to some other portfolio. You will get a notification, you will get a mailer which will be an indication for you that you should exit.
Why you should exit all the stocks? See, in a bunch of 10 stocks, probably 3 might be doing bad and others having been good. But if you want to exit all of them at once, like what is the point?
Sir, like what happens is, we had a rebalance option which we had to withdraw. The reason is, when you do a selling of stocks, you don't get that limit to instantly purchase any other stock. So when you do a rebalance, it may so happen that you will be exiting but you will not be able to buy. So lot of queries, lot of complaints we have got, because customer unknowingly, when they do a rebalance and if they don't have sufficient funds, then the selling limit is not consumed to buy another stock. So whatever you are saying is correct, sir, but however it is not helping a bigger chunk of customers who are coming, doing rebalance without having funds. Ultimately that is raising, leading to a query, because the portfolio breaks. Sure, sir. So yeah, one click sell is also there. So I can go and show you my own investment in one click. If you go to portfolio here, so the fourth option here at the top is portfolio. So here, whatever is my investment in one click is shown here, and let's say I have invested in this particular portfolio, and if I click on it, I have a choice to invest more. But if I click on any of the portfolio, so wait a minute, so here if I have given an exit, you will get this blink. So that again is an indication that our research has given an exit. It is your choice now if you want to continue or exit. And at the same time, you will keep getting intimation. So if you open any of the portfolio, there you will also get an option, click on it, click on the tile. Don't click on invest, click on the tile. The moment you click on this tile, so here you will have a choice. Renu, if you can just click on the tile. Yeah, so there at the last you can see exit one click. The third option is exit one click. So exiting is also happening in a bunch. The way you are investing, you can exit in a bunch. It is always recommended that you exit in a bunch, because what happens is, what I have seen personally for myself as well as my customers, I've seen that people tend to exit the profitable stocks. They have 10 stocks. Out of 10 stocks, 4 stocks are making profit, 30%, 40% return. They tend to book the profit and they keep held with the loss-making stocks. Very difficult to book the losses. So this portfolio option makes it convenient for you to track the profitability in a bunch, and accordingly you can take an exit in a bunch. So that was all on one click front. The next thing which I wanted to cover was family portfolio. I'm sure that lot of you would not just be handling your own account, but you must be handling your spouse's account, your children's account, and few people like me must be handling the parents' account also. So here we have a choice where you can add family accounts in portfolio. So again, I will show you. If you go to portfolio, in portfolio section we have two tabs. One is normal portfolio, one is family. So here, if you go to stocks portfolio, there are two tabs, personal and family. If you click on family, from here you can add your family members account for the purpose of tracking the portfolio, because it makes it very, very inconvenient. If you want to track, you keep logging in, logging out in 4 different accounts, and then you lose the track of it. Ki what was the profit in that account, how is the stock performing in the second account. So this makes it very, very easy. You can link it. The moment you enter the PAN number or the user ID, the other person will get a SMS. By clicking on that link, he will be required to log in and approve it. So the moment the other person will approve, only then you will get the access. So it is a very, very safe way of doing it. Similarly, at any point of time, if you feel that the other person should not be allowing you to see the portfolio, he will always have the access to delete it. So it is very convenient, very safe, where you can check the holding of your whole family member. And here, yeah, so it is all the stocks. So here at the top, Renu, if you can go and show the portfolio, go to the top. So if you click on back, yeah, click on family. Yeah. So you can try this yourself, and it will also show you what is the combined value of the portfolio, how is the segregation between small cap, mid cap, how is the sectoral segregation. So good insights is what you will get. So next thing I wanted to show you was tax loss harvesting. You had a query, sir, on that. So tax loss harvesting mein, if you go to that option, it will show you how much is your current year short-term profit. So how it works is, if you have a short-term profit, then the tax is 15% which you have to pay. But in case if you have any short-term losses also in the same year, and if you book the losses, then you tend to reduce the profit amount. So that is how you tend to also reduce your tax obligation. So let's say I have a profit of 4,300 and my tax liability is 654. At the same time, it is also suggesting that I have a unrealized short-term loss of 26,000. So if I see that I should be booking 4,000 rupees ka loss, which will eventually make my profit 0 and my tax liability will become 0. So I can choose to purchase back the same stock next day. I am selling it today, I am booking a loss, I am reducing my liability, and next day if you want to stay invested in the same stock, you can again purchase it on the next day. So this, yes sir.
Some kind of, like, okay, we have booked the losses, like we have booked the losses. So some kind of, maybe a letter or something could be saying that, okay, you incurred this much loss. Because, I mean, if you look at international investors, right, once they do it, they get this a notification from this ICICI that you incurred so much loss. At least that message would be easy for us to go to our auditors and say that, okay, this is the loss I incurred.
So sir, that thing is also available here. We don't do it on a daily basis because people, they don't track like profitability. You can track it on portfolio. It is available all the time. But transaction by transaction, profit and loss, if you want to see, we have that facility available in P&L. You can go to portfolio. From there, you can go to profit and loss statement. We'll take it separately. We'll not switch from this session. I will show it to you separately. Maybe after the session, some of our volunteer will help you to show you how to check the profit and loss. We also show you stock-wise profit and loss. In a particular stock in a financial year, how much was your long term, how much was your short term, how much was your speculative. So till that detail you get to know. And the best part which we show here in portfolio is, at any point of time you can get to see how much is your long term holding and how much is your short term holding. So let's say I have Tata Motors 1000 quantity, our portfolio will show you that out of 1000 how much is short term and how much is long term, because when you sell you will make the decision accordingly. So moving ahead.
In case of MTF, the interest which you are charging,
Yes sir.
will it be
No, sir. It will not be. Yeah, separately you can show it, sir. It is up to you, sir. You can consult your tax consultant or CA if they suggest to consider interest as an expense. Sir, ideally, as per the tax rules, they don't consider interest as an expense. But if your CA or tax consultant suggest you to do that, you can do it, sir. So, yes, sir.
We have a family portfolio which can be added.
Right, sir.
Is it possible to trade?
No, sir. Trading is not allowed, sir. It is only for the purpose of tracking. Yes, sir. Right, sir. Sir, if you are doing it, I am sure that if you are logging in 15 times, you may be doing transaction one time. So it makes it very convenient because you log into one single account, no need to keep hopping in, hopping out, keep a track of it, take a decision, and when you decide to do transaction, hop out and then hop into the other account. Yeah, it's there, sir. I will show you. Yeah. I will tell you, sir, that what we feel is during market hours, the most important thing is platform availability for doing transaction. That is the primary thing. So we have optimized our offerings in such a way that we are offering critical things during market hours, non-critical things which is unnecessarily choking up or putting up load, we have shifted it to non-market hours because capital, we are like capital gain statement, or let's say you want to check the order of last 1 year. So all these things, yeah, earlier we were showing it, sir, and now what we are doing is we are channelizing our offerings in different servers, which will ensure that trading has to be the primary offering at the market hours. There should not be any gap, and the non-trading things will also be equally available, where we have also identified critical and non-critical things. Yeah. Sir, I will come to it. I'm sure that if you are doing this on a daily basis, over a period of last 90 days, last 60 days, you would have seen that a lot of improvement has happened, and that is because of these changes which we are doing. We are gradually optimizing the things. And sir, I will request that we can maybe take it at the end. I have a few other things, like 4-5 things, I will just cover it, and I will again come back to you on a personal note. So one thing which I wanted to cover was MTF. I will come to MTF only. Yes, sir.
What is the minimum age of children or grandchildren which can be included in for the sake of education?
So if you have already added the portfolio, you will be able to see the name of all the account holders.
No, my point is, what is the minimum age?
Adult, they have to be adult.
No, somewhere I saw it is 15 years. It is allowed.
Yes, sir.
But
So currently we are not offering minor account. That is in process, and very soon we will also be launching that. As of now, we are not offering minor account. Only adults can open the account, and those accounts you can add in family portfolio. You can keep a track of it.
no, in IT they don't give more than before 18 years.
So minor account is also available. Let me tell you that there is an offering of minor account in the industry. There are certain rules that you can only hold it, and there are few restrictions to it also. So we are planning to offer it very soon, sir.
So likely when we can.
Sir, not shortly, but maybe during the end of the current financial year. So maybe by the end of 25, I will not be able to give a timeline here by when, but I am sure that it will be there. Sir, they don't have to be a minor. So can we now move to the MTF product? So MTF product may, as I said, when you buy stocks, like lot of you, I'm sure, would have funds available, but the funds may not be available in your ICICI Direct account. Like 2 days back, before expiry day on Wednesday, market gave a fall of 400 points. All of it, nobody anticipated that. And in that fall, we have seen mid caps falling by 10 to 15%. And very next day, it was again up by 10%. So such swing, such volatility in the market is creating a lot of fear. At the same time, for those who want to take risk, it's an opportunity for them to invest. But at those time, do we have funds is the question. Do we have sufficient funds available in the account to take the benefit or to capitalize those opportunities? So MTF is the answer for that. MTF is solving that problem where you can invest in stocks without worrying about the funds, without worrying about the availability of funds in your account. You have the liberty to arrange the funds within next 360 days. And the best part here is if you arrange the fund on very next day, then there is no interest which is charged. You can just give funds because T+1 is the settlement cycle. If you arrange funds on the next day and you add that, then there will be no interest which will be charged. Interest will only be charged from the next day of settlement day.
Next day, you mean next working day?
Settlement, so it is T+1. So if you are buying on Friday, then you will have time till Monday to pay back that amount. So all you need to do is go to the open position page, add margin, or you will also have a choice to convert the position to delivery. You can convert your MTF position by paying the full amount, and those shares will start reflecting in your demat holding. So that choice is available. You can do that any point of time. But if you do it by T+1 day, then there is no interest charged. So it is giving you the flexibility not to lose the opportunity and invest in market without worrying about the funds. So that is something is the product serving. And one more thing here wanted to add is in case you don't have cash also. So many people may not have cash, but they will have stocks. So you can pledge your stocks. Let's say I have 10 lakh worth of portfolio. I can pledge 10 lakh worth of portfolio by using share surge margin. So you can go to smart tools. So under funds it is there. You can go to funds. Under funds the option is share surge margin. So click here. So in 3 easy steps you have to stock. So let's say I want to pledge.
Can I pledge the same one?
No sir, because it is already pledged.
The margin one?
Sir, the stock which you have in demat, which are free holding.
No, the margin, whatever the margin amount, that can be pledged again or not?
No sir, that is already used.
Your amount.
So there are 2 things. One is the lakhs of investment, but it is lying idle. You don't get any interest out of it. You don't, but you keep getting returns and dividend. But if you want to make use of those idle shares in the demat, you can, if you have to take additional risk, if you want to take that additional risk where you see that you have funds available somewhere which you can deploy at any point of time at the time of crisis, then it is recommended that you pledge your shares, create the limit. By using that limit, you can further add on to your investments, and at times the stock falls. We have to be mindful that we should have sufficient margin to also cover the position, because yes sir. Sir, yeah, so what happens is whenever you purchase anything in MTF, we have to be very mindful that these stocks are required to be pledged, because
10 p.m.
yes,
Not doing, then it will be
right sir, right sir. So
already I have pledged my gold ETF. I have 3 lakhs in my account. Retro amount. I purchased 50 shares of Tamil Nadu Mercantile. Next day, automatically it has been sold.
sir, what happens is when you
give the sale order.
yeah sir, what happens is when you purchase any share, then on the same day itself, after 6 p.m. you will get a link. You will get a WhatsApp message from ICICI Direct. At the same time, you will get SMS and emails from your depository, NSDL or CDSL. And there it will be shown that click on the link and confirm the pledge. It is a regulatory requirement that whenever you purchase anything in MTF, that has to be safely pledged with the broker, because broker is purchased stock should be pledged.
Why should already I am having sufficient fund, pledged fund? Why I should
Sir,
pledge the stock which I have purchased?
sir, the stocks which you have purchased in MTF, it is required to be pledged.
within 10 p.m. we have to.
Have a cushion of 3 lakhs rupees.
Let us take this offline.
Sure sir, sure sir.
We are having so many people.
Right sir. Sir, I will come to you separately. So we have volunteers here, like any of you, Reenu or someone, you can please connect with client separately and please enlighten him. Sir, you have any query, sir? Yeah, sure. Sure sir, sure sir. Sir, we'll come back to you, sir. We'll not leave any queries unattended. We'll attend all the queries. We have volunteers, and after this session, you can please connect and we will do that, sir. The whole purpose of this session is we want to engage with you, sir. Sir, can we take the questions at the end? Sir, we can take it offline, sir. Sure. So anything which you purchase in MTF has to be pledged, and the pledging timeline is 10 p.m. By 10 p.m. if you don't pledge it, then next day morning it will be closed by ICICI Direct. Compulsorily it will be get closed. So one thing, very mindful that anything in MTF has to be pledged. Once you pledge it, it will be shown in MTF position, go to open position. So there you have a section called pay later MTF. So here all the positions will be visible, and these positions will also be visible on mobile app. If you go to mobile app, there is a tab called portfolio at the bottom. So under portfolio we have open position sections. All the positions, let it be your commodity, FNO, MTF, intraday, everything will be visible in one single screen. So that makes it convenient for you to keep a track of it and manage it. Yes, sir. We show it here itself, like in MTF open position. Yeah. Sure, sir. Got it.
So I just wanted to know, MTF shows that MTF screen.
Got it, sir.
Open position.
Sir, I will have it arranged and I will show it. Like one of my colleague must be having MTF position, and if anyone of you would have MTF position and would be comfortable sharing it on the screen, you have it, sir. Can you open your mobile app, sir, and scan the QR code? If you have logged into the app, you can just open the mobile app, scan the QR code, and your account will be logged in. If you are comfortable sharing to the forum, sir, it is up to you. Go to mobile app, sir. ICICI Direct app.
I don't have.
Okay.
I'm using only the web.
Yeah, we can take it separately. Sure. So next thing I wanted to cover was GTT. So lot of people have a demand that GTT should be there. And for the benefit of all, I also want to tell you what exactly GTT is, what problem is it solving. So a lot of times we have few stocks in mind, few target in mind, and at the same time we have stop loss also in mind, that this is my holding, the current price is 1000 rupees. I should be exiting this at 1500. Or let's say I should not be holding this below 800. So these are the mindset which we all have in mind, that we should be exiting and booking profit at times. So GTT will help you do that, where you will be able to go to this GTT option. Here you click on sell, you click on OCO. So OCO is one cancels the other. So it will allow you to place both the order. You can set your stop loss price as well as you can set your target price. So let's say ITC as a stock, which is currently trading at 420 rupees. If let's say I want to sell it at 550, so you can just define 550 as a price here in the stop loss section, and in the in the stop loss you can keep a price of 380 rupees. Let's say below 380 you don't want to hold it. So 380 can be defined in stop loss and target can be defined as 550. And then simply you can click on create GTT, your order will be created, and this order will be valid for next 1 year. The validity of this order is 1 year. You don't have to log in on a daily basis on our platform and place this order. So this order will do whatever you want this order to do. So you just define it and it will take care of it, sir. Sorry, sir?
One challenge, suppose I have a few stocks on the SIP list and some on GTT. When it comes to the order book, right, I'm not able to distinguish which comes to GTT, which comes to the.
Yeah, so once you place a GTT order, under order book we have a separate section. So under order book you will get to see normal order as well as GTT order. So here there are tabs available, orders and GTT. So whatever order you place in GTT will be visible on this screen. You can modify, cancel, and once it is triggered, so let's say the order which you have placed at 550 rupees to sell ITC and the price of ITC reaches 550, then this order will get triggered and it will move to the normal order. So in the normal order you will be able to see that the channel of such order is SYS, system driven. Matlab whatever order you have placed yourself, it will be shown as web, but whatever order is placed by the system automatically will be shown as SYS. So you will clearly come to know that which order you have placed, which order GTT has placed for you. So it is just matter of making use of it, and this facility is currently available on the website. It will very soon be available on mobile app.
What happens if the price doesn't reach the target in the next 1 year?
Then this order will automatically get expired after a year. you will have to again place this order, sir. And once this order gets rejected, you will keep getting intimation also. So what happens is, while placing this order, like especially for the sell account, so you have to provide mandate, like just in case customers who are into the EDIS mode of selling, where like there is an NSDL mandate which comes. So you will have to provide the mandate. If the mandate is not provided, if the funds are not available, then such orders will be rejected.
In the meantime, I will sell the stock. Automatically it will close, or I have.
Sir, if you have placed the order, sir, if you have already sold the stock separately, then when this order will get triggered, and if you don't have sufficient stocks available, it will get rejected. So if you have sufficient stocks, then there will be double selling. But if you don't have, it will be rejected. So a few advanced things I also want to cover here in this session is execution algo. So under smart tools, we have something called execution algo. So for those who would want to average out the positions, so let's say I want to buy 10,000 quantity of ITC in a day, but I don't want to buy at one go because we don't know. I want to spread out the order during the day at different price. So in execution algo, we have different ways. Averaging algo is there, price band algo is there. So just to give a like a demo, if you go to price band algo, so click on it. So here you will be able to define that a stock particular, so it will give a self-explanatory tooltip for you to understand it. It will allow you to define a price range. It will allow you to define a quantity. It will also allow you to define a slicing quantity. So let's say 10,000 quantity, I want to keep placing in a slicing of 500 quantities. So you can define that all. You can define the end time, start time. So let's say monetary policy is coming at 12. You want to do whatever action before 12. You can put an end time of 12. So till 12, if the stock price touches this range, automatically that slice quantity will keep happening for you, and you will be able to execute the entire order. So especially those who want to buy or sell big quantity, very helpful for them. And for derivatives, especially for derivatives who trade in Nifty, Bank Nifty, since there is a quantity freeze limitation, you cannot place order beyond the quantity. So for them, we have a order slicing algo also. Go to smart tools. Yes, sir.
Is it only for only one day?
Sir, this is valid for a day.
Okay, we cannot do it for.
No, sir. No, sir. It is valid for a day.
Because you have they are intraday and normal.
So intraday means if you want to do a trading kind of transaction in margin, and normal is a delivery.
So I cannot do it for a week.
No, sir. No, sir. It's not there. It's a good feedback, sir. Like, thank you so much for sharing your insight. Maybe we will do something keeping that in mind. So under execution algo, we have one more thing, slicing, where you can slice the orders into multiple slices, which will help you execute it. And one beautiful thing which we have made is scalping. So scalping is something for traders, especially for traders. If let's say the stock is at 1,000 rupees, and you would want to buy the stock at a dip of 2 rupees. So every dip of, so if I define my strategy like this, that every dip of 2 rupees I will buy, and every rise of 3 rupees I will sell. You can define it. So this is the max quantity, because if you keep buying at 2 rupees, buying cannot be infinite. So you can define your max quantity. It will ensure that every fall of 2 rupees, that maximum quantity it will buy, start time, end time, and the price is also mentioned here. What should be the profit, take profit exit difference, and average entry difference. So 2 rupees entry difference and take profit is 3 rupees. You can define that. It will keep doing completely throughout the day, and if your strategy works well, you just keep your mobile in the pocket and the trading will keep happening. Basis what you have defined. So those who are trader, because a lot of emotions get attached, like when you buy, you feel that you will buy at a dip of 2 rupees, but if it falls, then we become fearful. कि थोड़ा और wait करते हैं, let the price fall further, or at times you rush in and you buy the whole quantity. So it will ensure that discipline you have thought is implemented while trading. So it keeps the emotions away. So it is available in smart tools, execution algo. It is also available on our mobile app. On our mobile app, if you go to the tools section, under the tools sections we have execution algo.
Then we have video demo of this, because we cannot remember
Sir, this session is a YouTube session and it will be available on YouTube. So whatever we are discussing will be automatically uploaded on YouTube. You can refer that session, this session. Video is also available, sir. So the moment you click on it, like as I so video is available on YouTube. Separate videos are available. So if you search for execution algos ICICI Direct on YouTube, you will get a video on it. So everything is available, sir. So learn about execution algo. That link is also there, sir, at the top right side. So I will request all of you to please like park your questions. We are also eager to take your questions. Sir. This is currently available for derivatives and equity. Soon it will be available for commodity also, sir. Yes, sir. So whatever we do it for the bigger offering, which is derivative and then equity, and then we pass it on to commodities. So now I will move to the trader segment. For derivatives, we have few offerings. So if you go to FNO section, Renu, under FNO, we have basket order. So basket order is the option, as I have shown you the one-click equity, where you can create a basket of equities. Similarly, you can create a basket of FNO here. So these are few baskets which I had created earlier. So based on your preference, so let's say you want to do a strategy of butterfly where 2 call options you want to buy and 2 far strike call and put you want to sell. So you can just create a basket, and in one click these basket will get executed. So it ensures that there is no impact, because by the time you execute all the 4 legs separately, the price can move and your strategy may go for a toss. So this will ensure that the execution happens at the time and the exit also happens at a time. So this is something which you can use. And for beginners, those who would not want to create a strategy but would want to look for a ready-made strategies, for them we have one-click basket also. So if you go to Smart Tools, one-click FNO. So these are ready-made strategies which are available. So these are research recommended strategies given by Jay and his team. You can execute from here directly. You get a sense of what is the stop loss, maximum profit, maximum loss. So complete information you get a sense, and if it fits in your risk taking ability, you can just execute it from here.
The brokerage will be leg-wise?
Same. No, it will be leg-wise, sir. The brokerage will be as the way it is charged. And one last thing which I wanted to cover, Jay, in the session. So we will have 15 minutes ka session at the end. We'll stretch it for another 15 minutes. So I just wanted to show you the last thing, which is pre-built strategy, strategy builder. So from here you can create the strategies. Renu, if you can just show us the pre-built strategies. Yeah. So this is the latest offering in FNO, where we have these long spread of strategies. So these are the payoff. This if it is going down, the maximum loss is unlimited. So based on your choice, so let's say you want to, so bull put spread mein you can just select the leg. It will show you the payoff. What will happen if you, let's say, change the strike, you change the expiry, what is the maximum profit, maximum loss, what is the margin required. So everything you will be aware of it at the time of execution and track it from one single screen. So you can, yes sir, you can, Renu. So it is available for Nifty and Bank Nifty. Renu, if you can please go back to that previous screen. Yeah, change the underlying to ITC. Now click bull call spread. Yeah, expiry has to be monthly. Yeah, feedback taken, sir. It is happening for Nifty, sir, only. So it's for index. Yeah. Sensible, there is a subscription fee, sir. You have to pay the subscription fee and then you can use it. Yeah. So Jay, if you are online, we would want to hear from you. Like you will have 15 minutes to share your insights, and then maybe we can take the Q&A. So Jay, if you are available online, we can switch to the Teams meeting, and you can share insights regarding trading. You can give some background about the options trading, and so can you hear us, Jay?
Definitely, Rahul. Thank you. Definitely.
Yeah. So
Just
Jay,
minute,
now
I'll
the
just
forum
turn
is
on
yours.
my-
Be a bit louder, and I'm happy to see that the people over here still have the same energy which they had when they joined us. So you can please take over from here now. Over to you.
Sure, Rahul. Rahul, am I clearly audible and visible?
Yeah, you're visible. I can completely sense that you are physically present here. So you are very much visible. Thanks.
So, first of all, hello everyone. I'm heading derivatives and quant research at ICICI Securities. Also, I would like to thank you all for participating in such a good number. I've got the update, and I'm really happy to see this kind of enthusiasm. This really encourages us to do more and motivates us to do more. And definitely going forward, we'll definitely catch up in person as well. Unfortunately, today we could not come because of the flight cancellation by SpiceJet, as Dharmesh also mentioned. So apologies for that, friends. But then yes, thank you for providing us an opportunity to basically present this to you online as well. And Rahul, you have been managing things there. Rahul and team have been managing things there quite good. So I really appreciate that as well. And now I'll be sharing my screen, and with that I'll be sharing the insights
So Jay,
on derivatives
just wanted
as
to
well
tell
as
that
quant research.
you will have 15 minutes. So maybe in
Sure.
15 minutes, let us cover whatever you feel is important to cover.
Sure, Rahul. So this is what I'm going to present it now. I'll just get confirmation from you whether you are able to view my screen, Rahul.
Yeah, Jay, your
So
screen
is my screen visible to you?
Yeah, it's visible.
All right, friends. So here we go. I will skim or go through the few points very quickly, and I'll highlight more on the important points. So I'll tell you that these days we have been seeing that option market is growing quite a lot in India. India is one of the biggest derivative markets, and we have seen a good retail participation as well. We have seen that 98% of the volume that happens in derivatives, friends, comes out of options, and mainly of that, if you can see on the slide, 36% from Nifty and 56% from the Bank Nifty. So there's a lot of demand, a lot of participation in options. So how can you benefit by trading, and what are the different basically products available? What are the different ways to trade in derivatives through options? Is what I'm going to present now. So in derivatives, we have two things: call options and put options. So if you think that markets are likely to go up, you buy call options, and if you think that markets are likely to go down, you buy put options. Right? There are different strikes in options as well. So there are out of the money strike, there are at the money strike, there are in the money strikes for both call and put options. So if you think that if you're very confident about the move, generally people buy in the money options. If the probability is a bit less, people buy at the money options. And if someone is less probable, or there is a huge event ahead, then probably someone buys out of the money options, as the premiums are lower there. Okay, so depending on the risk reward, one chooses the strike. Okay, now there are two ways of trading in options, friends. One is through options buying, okay, and second is through options selling. Who does options buying? Option buying is done by someone, a directional view that yes, Nifty is trading at around say 22,000 levels. I think that next week, and now options since past couple of years have the weekly options as well. And every day now we have an option expiry, so there's a lot of opportunity. And with this kind of participation, there is a lot of liquidity available in the markets as well. So there are two ways, as I said, dealing in options. One is buying options, one is selling options. If you have a view that from 22,000 next week, you think that Nifty is heading towards 21,500, say, if your view is bearish, one will buy put options of maybe 22,000 or 21,500, depending on the risk appetite. Okay, that's through buying options. If your view is bullish, I will go to 22,500. Probably will buy 22,500 call option, right? there's other way of trading this is that if you think that markets are going to go slide from 22,000 to 21,500, you probably sell call options. Okay, and vice versa. If you think that markets are going to go up, you will sell put options. That's also a way to earn money. Now, why option selling basically earns regular income? Reason is that when you are a buyer of an option, friends, the probability of winning theoretically is 33%. Why? See, the markets either go up, they either go down, or they remain sideways, that is flat. So if you are buying an option, say for example, call option, you will win, okay, or you will make gains when markets go up. If they remain flat or if they come down, you lose. So there are three outcomes, of which one is fixed. Theoretically itself, option sellers have a higher strike rate, or maybe higher probability of winning. So if you're an option buyer, your strike rate has to be higher. I mean, if you make a call that 10 times that markets are going to go up, of that 10 times, 8 times it has to go up, right? Then only you make money. So option sellers are there, option buyers are there. Option sellers make money because of premium goes down. It goes wrong. If ITC goes down to 350 instead of 460, you lose maximum of 15 rupees. So risk is always less as an option buyer. If you can see the red line, there is a limited risk. So what are the option buyer advantages? The risk is limited and the gains are higher. Okay, and the margin requirement is less. Now, what are the advantages of option seller? The advantages of an option seller is that the probability is high. Hence, you can make consistent money. The only disadvantage or the major disadvantage, friends, is that the risk is unlimited. If you can see one arrow pointing down. Okay, so in the case of call option, or in the case of buying option, it was a red line which was very flat. On the negative side here, it's not flat, it's maybe heading down, it's linear. So that's what we call unlimited risk. So that is one risk which option writers basically carry with them. But why they do that? Because they have regular income. Now, how do we make money as a buyer or a seller? So as a buyer, I told you, if you have a view that, okay, this stock is going to go up, you'll buy call option. If you think stock is going to go down, you'll buy put option. Okay, that is as a buyer of an option. As a seller of an option, you have, many strategies. I would say many strategies, but of which I'm going to explain you or present you two strategies of which in the algo as well. So we're going to come out with the quant or algo based strategies going forward as well. And these strategies we're going to automate as well and provide it to you. Okay. So yeah, here we go. So there are generally, see, I've just listed down here 18 to 20 strategies, but I'm not going to explain all of them. Anyway, because we are short of time, but otherwise as well, if you can see in the range bound section, okay, in the range bound section, the last two one, and condor and butterfly, this is the strategy which you can do on a regular basis using the margin of yours as well. So suppose if you have 10 lakh rupees minimum, I'm saying 10 lakh rupees or 5 lakh rupees as a portfolio in equity cash or equity or in equity cash segment, you can use that, you can leverage that, you can give that as a collateral and know that 22,000, the range for Nifty is 22,500 and 21,500. What I'll do is I'll sell call options on the upside, I'll sell put options on the lower side. Okay, the margin for this would be around say 1.5 lakhs. Okay, now that's too high because when you sell these out of the money options, the premium would be what, 20 rupees, 20 rupees, 40 rupees, or maybe 30 rupees, that is 60 rupees. So 60 rupees on a lot size of 50 will fetch you returns or gains of 3,000 rupees. But this 3,000 rupees gain would be on what? 1.5 lakhs. Okay, so now in order to increase your return on investment, what do is you buy 2 rupees or 1 rupee call option and put option further out of the money. Okay, so that will be an iron condor strategy wherein you have sold out of the money options and you have bought 1122 rupees out of the money call options again. So in a way you are hedged. Okay, and otherwise your margin requirement would come down from 1.5 lakhs to 60,000 at the max side. Now this 3,000 returns which you will make will be on 60,000 and not 1.5 lakhs. So that is, it increases the return on investments. So even if you go wrong one time in 4 weeks, okay, that is if you need to strike 30,000 rupees, and if you basically use the collateral margin, then probably the returns would also go up to 30-36%. Okay, so here you can see few months there are negative, otherwise the total is always positive. And what is the drawdown? What is the risk? you can see the return to drawdown, it is near to 1 always, 1 or more than 1. Okay, so that's a decent risk reward. Similarly, you can do it for Bank Nifty as well. So if Nifty is 96%, Bank Nifty is 76%. Right, so this is a good number. Hence, we also backtested, and if you see 0 to 7%, then it comes to 88%. In fact, so that's even higher number. I also backtested, if we say sell, say 2-3% Bank Nifty call option on the upside, 2-3% put option on the lower side. Okay, and if I keep a stop loss as well of say 3,000 rupees, what could be the returns? And returns are as good as 1,26,000. Okay, the margin requirement would be the same as that of Nifty, that is 60,000. Now, even if I take a haircut of say 30% on this, so that means that I would reduce say 50,000 rupees profit out of this, 5,000 net on 60,000. So still getting approximately around 30% CAGR. I mean, and of what nothing do this, and if you think that you don't have time but you're interested doing this, then in future maybe couple of weeks ahead, going forward, I would say we are going to introduce these products into a Spring platform. It will be automated. You just have to log in the morning, and the rest of the trade will happen going forward. So there are interesting products coming in, options as well. They're already available. We are putting this manually. You can do manually or wait for us, coming out. With such kind of a strategy in the Spring platform as well. Last thing to tell you that, friends, there are a lot of manual recommendation from our side as well. We do YouTube live sessions on the day of expiries. We do Nifty, Bank Nifty expiry on Wednesday and Nifty expiry on Thursday, and then vanilla option, derivative strategy, and conflict. These are the other few products of ours. Right, so that is all from my side. These are the few points to remember. If you just want to have a look, you can have a look at it. That's all from my side, friends. Thank you so much. These are the few very important points as a trader or as an investor. I mean, if you follow this, it might help you in your trading or investment decision. Thank you so much for your patience again. Apologies once again. We could not reach there because of the flight cancellation, but we are looking forward to meet you in future. Thank you so much.
Hello, Jay. Am I audible?
Yeah. You are audible.
Yeah. So we'll have a small session of Q&A. So especially for derivatives, if any one of you would have any question, so sir, yeah, over to you.
The short strangle that was discussed as a very good point. I find it is very good.
Yes, sir.
Number one. The problem that we face is that when the price is moving towards the strike price, the premium increase is disproportionate.
Yeah.
So we don't know what is the. Many times I found that price approaches the strike price, the premium increases substantially, and then after some time it comes back. So the premium falls. Yeah. So the advantage of strangle is that you have collected the premium, waiting for it to become zero.
Sir, what happens is.
So now, what should be the strategy? What should be considered as stop loss?
Yeah, I will come to that, sir.
Yes.
And in the meanwhile, I will like to thank all of you for joining this session. Thank you so much for joining us, and our apologies that we had to stretch this session for another 30 minutes. So, so we have refreshments which we are serving outside. So those who have Q&A may stay here. We will be more than happy to take the Q&A. And those who would want to take refreshments, it's like we are serving it just opposite the registration counter. You can feel free to have that. And so the question, Jay, here is that in short strangle or straddle, whenever we do, so especially when the strike, I mean the underlying goes near the strike, the premium fluctuates very rapidly. So that, what I understand is, it's creating a fear within those who have done the position. So how to manage such positions where they, while taking the position, they feel that it's a very risk-free kind of position, or let's say less risky. Yeah. So fielding kaise lagana hai is the question I feel.
I got the question. I'll just reply this to you. See, basically when you initiate a short straddle, you do this in order to pocket the premium, having the view that markets may remain sideways and the premiums would go or approach zero towards the expiry, right? So suppose if you sell the options having the premium of say 50 rupees each, call it, okay, if there are out of the money options, if your risk risk appetite is lower, if you are a bit risk averse, so you have pocketed 100 rupees premium. Rahul, this premium, what is the risk you are carrying? You are carrying a risk of unlimited loss. Okay. So point number one is that you need to place a stop loss in your system. Okay. If you are doing this on an intraday basis, even if you are doing this on a positional basis, that's fine. But then, if you have to have say some stop loss, say for example, if the stop loss is say 50 rupees. Okay. So if next day, if the total comes to 150, you need to exit. That's one way of doing it. Second is that you might, in order to avoid the overnight exposure or overnight risk of unlimited loss, you might as well buy out of the money, a bit far out of the money, call and put options. So that could be of say 15 rupees. Example, your total cost you will incur is 30 rupees. Your net profit will come down and you spent 30 to hedge it. But at least you will be remaining hedged on your overnight position. You will make 70 rupees, right? And then you can have this stop loss of say 30-40 rupees on your total 70 rupees strategy as well. That's other way of doing it, and this will help you to reduce the margin from doing from 1.5 lakhs to probably 60,000 as well. So one is you need to have a stop loss. Second is you might hedge it. Third is you'll get the higher ROI because of margins coming down. And fourth, one thing I would like to also tell is that that's a little for the pro traders. You can shift your strikes. So if the price is going up, probably you exit from your loss position and you again create a short strategy. But that is called delta neutral strategy. That's a bit complicated one. But for the keeping it very simple, these are the 3 points to keep in mind.
Hello? Yeah, am I audible? Yeah. So, can we take the next question, Jay?
Sure.
I'm not getting in the position. If I carry forward tomorrow, there is no stop loss on that system.
If I carry forward the option, whether it is ATM or OTM or ITM, there is no stop loss, right? If it is on the intraday only, I am getting the stop loss. Intraday and plus. What is the
You're
reason?
talking about selling options, right?
Yeah, selling options.
Yes. So intraday you can place a stop
buying
loss, sir.
yeah.
Overnight you cannot place a stop loss. So overnight what happens is basically, suppose if you have sold at a total of 100 rupees, okay, next day suppose if it opens at 120 rupees, you can think of exiting because your gain was of 100 rupees, you might 150. There is a chance that there is a big gap down of say 3, 4, 5% on a Nifty, okay, or a bank Nifty, or maybe upside. That happens during the event time. So, avoid. Now, what if something like COVID happens, which is really not even predictable? I mean, there was no event as such, like general elections or maybe RBI or Fed policy. During these times, you do not carry naked sell positions, okay? But then if something like COVID happens, there is one of kind of an event, sir. Whatever loss happens next day, you need to exit. If you are not hedging your positions. Hence, I said that it is always better to hedge your positions by paying at least 5-10 rupees premium. But if these kind of an event happens, you are already hedged.
Now, what is the reason? That's what I'm asking. When I have the carry forward options, there is no stop loss category. Why? Intraday, that I am controlling myself. If I carry forward, like Friday.
The reason is, sir, that if I keep a stop loss at 100 rupees, if I have initiated a short straddle or a strangle, if I place a stop loss of 120, right? But if the price is only open at 200, what do? It will jump, right? So there is no point keeping a stop loss before that, 1 day prior.
No, when the price jump to, when it is gap down, like 300 points gap down, I'll be the big loser on the next day, right?
But stop loss will not hit only, sir.
That's
so
what
if you
I'm
have
telling.
initiated, it will never hit any, because the option will only open from 100 to probably, or from 50 to 300. So how will you place a stop loss? Even if you have placed a stop loss, say, if you have sold it at 50 rupees and you've kept a stop loss of 75 rupees, if the market price opens at 300, your option will not exit, or you'll not be able to buy option at 75 because the opening price is 300. So in market there are 4 data points here: open, high, low, close. If your open is at 300, how can you get it at 75 rupees?
Okay. So that means I can play only on the intraday. I don't want to take chance. You mean to say?
You should not take chance selling naked options overnight in order to avoid overnight exposure or high risk. I would always suggest you hedge it if you're
Okay.
taking overnight.
Yeah, I got it. I got your point. Thank you.
But it helps to reduce your margin as well, right?
I
From
used to get
1.5
loose.
lakhs to will come to 60,000. Yeah.
I used to be greedy and I used to get the loser also. Okay, thank you. Bye.
Okay, sir. Yeah, Rahul.
Yeah, Jay. So anyone of you would have any queries on future and options in options trading, you can please raise your hand. I will come to you. We'll take questions. Jay is there with us. Any queries on FNO?
Just one feedback. The YouTube live sessions that happen during the market hours, right?
Yeah.
So most of the session is in Hindi, and it's a little difficult for us to follow.
Yeah. So we have ensured that especially this session happens only in English.
Not
So we
just
take
the
this feedback, sir.
YouTube live sessions that happen during the market, right? The trading sessions.
The YouTube live
Yeah.
sessions you're talking about?
It is on YouTube. You can search it, sir. Yeah. So any further queries? Maybe you can ask question on the research outlook. Maybe on outlook, not just the product understanding. See, future and options सीखना बहुत आसान है. आसान मेरा बोलने का मतलब ये है कि you can learn yourself. You can screen through the tutorials and get a learning of future and options. But we have an expert from research, Jay. In case if you have any questions regarding the outlook, he is the head of quant derivative research. So any queries if you have, you may please ask. Any one of you? You have any query on the research part? You can please take the word.
हेलो सर, इंडेक्स ऑप्शन ट्रेड करते टाइम में इंडेक्स डायरेक्शन को प्रिडिक्ट करने के लिए क्या क्या स्टेप्स फॉलो करना है, इसके बारे में कुछ बोल सकते हैं क्या?
बिल्कुल बिल्कुल. So I will once again, Rahul, just for simplicity, I will share my screen. And to answer his query very quickly. So is my screen visible to you, Rahul? Rahul, is my screen visible?
Yes,
Yeah,
sir.
you're visible.
Yes, sir.
Yeah. So see, these are the 4 important points if you are an option buyer, either from the weekly option point of view or maybe monthly option point of view. Okay. So how do you do that? See, these are the parameters of buying on options. Okay. So you wanted the answer for this only, right? Your question was in what are the parameters?
Yes,
So I
sir.
would say that first thing you should know is the trend analysis using technicals. So first you should use some chart patterns. If at all there is a breakout or a breakdown, okay, or if there is, if you are following a Dow theory, you might as well come to know whether it is an uptrend or a downtrend. Okay. Then there is one thing which is called VWAP, that is volume weighted average price, which is available only on futures. It's very simple. If the prices are above VWAP, it means it's bullish. If it is below VWAP, it's bearish. You can use trend lines and momentum indicators. This will help you to further get a confirmation of the trend, whether the trend is bullish or a bearish. Because if you know the trend that is bullish, then you'll buy a call option. If you know the trend is bearish, you'll buy a put option. That's from the technical side. From the option side, you look at the options chain. You understand that where the highest concentration of call and put strikes are. If you think that at 22,000 there is highest put open interest, that means the prices are or the market is less likely to come below 22,000. So you look at this from the option seller's point of view, not from the option buyer's point of view. So there is high open interest on option put option of 22,000, doesn't mean that people are buying or anticipating a fall. That means people are selling put options in anticipation that market might not fall below those levels, and vice versa. Okay, so you can look at this. Then you look at PCR. I mean, above 1 PCR means it's bullish, below 1 is bearish, 1 is neutral, so you avoid. Yeah, if the PCR comes to 0.5 or 0.45, it becomes very oversold. Recently Nifty had come, Nifty PCR a day before the expiry was at 0.46, because of which on the day of expiry we saw a jump of almost 100 plus points, 150 plus points. Okay, and so was with Bank Nifty during the Bank Nifty expiry recently. The PCR was at 0.52. So Bank Nifty did not fall much. Otherwise, mid cap and Nifty, small cap and everything had fallen that day. On the contra side, or maybe on the flip side, if the PCR comes to 1.7, it becomes too oversold, overbought as well. Then you can look at the market participant data, FI data, client net long, and all. So these are the few points which you look at the parameters for options buying. And then if you have to plan the expiry, at the start of the expiry you buy out of the money options, because if you go wrong or if it takes time for your view to eventually play out, the theta decay will happen at a lower or slower pace. At the midweek you will buy at the money options, and on the day of expiry I would suggest always to buy in the money option, because you get that delta move. Even if Nifty moves by 50 points, you will get 30, 40 points quickly. If you buy out of the money options on a day of expiry, 5 rupees, 10 rupees, what people do, the probability of winning or success is less. So I hope this helps you to understand.
Yeah, thank you so much, Jay. So I think with this we can come to an end of this session. And maybe we can take the last question if you have if you have any question. So let us take the last question for the day. So Jay, I'm sharing the mic with Sayur. It's not FNO. Anything with FNO, sir?
Yes.
Please take.
Thank you, Jay. So what I want is assume that I am creating the iron fly. Okay, it's a bundle of four legs, right? Two sell and two buy legs. So assume that it is not my full-time job, it's a part-time, right? So I want to assume that a weekly expiry. If I am creating the Friday Nifty, right? So I do want to set total all the four leg as a profit as for 2,000, loss as 5,000, just for example. So this should be executed without my knowledge, right? Will it be possible? Like if I get 2,000 profit, all the four legs should be closed. If it is 5,000 is a loss, all the four legs should be closed. Do you have anything in ICICI Direct?
It is available in a Spring platform, sir. It is available in a Spring platform. You can create your own strategy like this, and you can execute every day. So we have this option available, Rahul, on a Spring platform, wherein the traders can come create their strategies if they require the help of ours. Our coders also help the clients to create their strategies, wherein they can come and deploy their strategies. So this automation is very much possible. We are coming out with an automated strategy using Iron Condor. So wherein we are going to sell out of the money options. Okay, but you want to do Iron Fly. So currently we are not going to come out in near future on that. But we are coming with 4 to 5 option strategies which will be automated. Okay, and the short straddle, intraday, and Iron Condor are 2 of them. But if you want to do Iron Fly, you can use a Spring platform and get it automated.
So you mean what is the tentative timeline, sir?
Timeline, I think the product team will be able to help you out with that. Rahul is there. You can speak to Rahul and he can help you out with that. That how much time will it take for you to get this strategy developed? But yes, it can be developed wherein you can have this predefined rules of booking profit at 2,000, 3,000 rupees and initiating a stop loss of 2,000, 3,000 rupees.
3 to 5,000.
That is what this platform is made for.
So if at all this is implemented, it's very useful for big traders, right? We know our profit, we know our loss. Sure.
It will be done. Yeah.
Okay. Thank you, Jay. So I will touch with the Chennai team.
Yeah, definitely. And you can tell them that, okay, on Spring, I want to create my own strategy. It will be done.
Sure. Thank you, Jay.
Yeah,
Breeze
thank you
API
so much.
is what we have, right, Rahul?
Yeah, so
Breeze
we have a
API.
Breeze API. So those who would want to make use of that, it helps you to connect to any trading platform. You just have to register it. You can connect any trading platform, put your strategies, define your strategies in those platforms, and it will be connecting to our trade engine and the order will go. So we have a separate video. It's a very detailed video on YouTube. 90 minutes ka video is there. If anyone interested, he can just go to the YouTube, search for Breeze API, and you will get to know about it. And with that, Jay, we will end this session. Thank you so much for joining us. Dharmesh, we can see you also. And thank you so much, both of you, for joining us in this session. And it was very engaging. And we will keep doing such session in different cities. And thank you, audience, for joining us. And with that, you may please proceed for the refreshments. And if you still have queries, we have volunteers here. We'll take it offline. So with that, we end this session, sir. Thank you so much for attending it. Thank you so much.
Thank you all. Thank you.
Thank you.